Suppose A starts business with cash rupees 5,000, purchases rupees 1,000, sales costing rupees 800, for rupees 2,000, paid wages rupees 300, closing stock as on 31st March 2013 rupees 200. In this question you will find a new thing. I have written down purchases. I have not used the word goods or A purchased goods. In accountancy, purchases means purchase of goods, not any other assets. In the same way, sales means sale of goods, not any other thing. So be careful. And I have not written whether these are cash purchases or credit purchases. So we'll assume that these are the cash purchases. And one thing more, I have used the term that is wages. In transaction number 4, I have written down paid wages rupees 300. Wages means the reward for the work to the workers. Suppose you are running a bookshop. You may need a help of some salespersons. If you engage some person who can help you in selling the books in the shop, you will have to pay every month or every week something to that person. And generally you call it salary. So what is the difference between wages and salary? If you engage any person and he does the physical labor for you without using any specialized skill, you will have to pay wages as reward. If you engage some person with a special skill, means for sort of intelligent job or mental job, then you will be paying salary. So be careful. Suppose you start some business and you engage two persons. One person who will serve you some water or something like that, and another person will do the computer job. So the person who is serving just a cup of tea to you, or just brings water for you, or just arranging the files of your business or in your office, the money you will pay to that person, that will be called wages. And the money you are paying every month to the person who is doing computer job for you, that will be called salary. Because computer man is giving you specialized services. He has got a special skill. He is doing a sort of intelligent job. But the person who is arranging files for you, and he brings water for you, and he arranges the cup of tea for you in the office, you are paying wages to that person. Because for all these jobs, one doesn't need any specialized skill for that thing. So it's just like more or less physical job. Let's come back to the question. So start business with cash 5,000, purchases 1,000, sales 2,000, paid wages 300, closing stock as on 31st March 2013 rupees 200. So let's make the accounting equation. So first of all, draw the format. On left hand side capital and liabilities, and on right hand side cash and stock, or you can write down goods, whatever you like. So first of all, A starts business with cash. So capital will be rupees 5,000 and cash rupees will be 5,000. Purchases rupees 1,000. Cash will be reduced by 1,000 and the new cash will be 4,000, and the capital will remain as it is rupees 5,000. And the new item will be stock rupees 1,000. Then sales. Sales means sale of goods. Means we will assume that the goods have been sold on cash. So costing rupees 800, for rupees 2,000. It means there is a gain of rupees 1,200. If there is any profit or gain, that will be added to the capital. So capital 5,000 plus 1,200, that will be equal to 6,200, and cash 4,000 plus 2,000. The new cash will be 6,000, and the stock 1,000 minus 800. The new stock will be rupees 200. Now paid wages rupees 300. These are the routine expenses of the firm. If you decide to run some business, you will have to meet so many expenses. You will have to engage some other people, and you will have to pay wages, salary. Sometimes you will have to pay advertisement. Sometimes you will have to pay taxes, or maybe you have to pay for the rent of the shop. Maybe you have to pay for the maintenance of the computer, etc., etc. All these are called routine expenses. And expenses always reduce the capital. It's a sort of loss. I will explain you later what is the difference between expenses and losses. But expenses always reduce our profit. So capital will be reduced by rupees 300, and on asset side, the cash will be reduced by 300. There will be no effect on stock if you are going to pay wages to someone. So the new capital will be rupees 5,900, liabilities 0, cash 5,700, stock rupees 200. This is the last equation. And you know it very well. The last equation is converted into balance sheet. So draw the format of balance sheet, and at the top write down balance sheet as at 31st March 2030. And on capital plus liability side, you will write down capital rupees 5,900, and on asset side, first item is cash, that is 5,700. This is the item I have taken from the last equation. Then stock rupees 200, and the total 5,900 on both sides. One thing more I would like to explain you, and this thing is very, very important to you, because in the whole of your career, you will be writing down a lot of figures, digits in the books. So you must know the art of writing figures. Suppose you have to write down 500, that is 500. If you have to write down 5,000, how should we write? 5000. Is that right? No. You should write down 5,000. Suppose you have to write down 11,000 rupees. So how will you write? 11,000. Suppose you want to write down 1,20,000 rupees. How should you write? 1,20,000. So have you noticed something? The figures of thousands, the digits of thousands are separated from other things. In the same way, when you are going to write the figure in lakhs, the digit of lakh should be separated from thousand. So this is the style of writing. And secondly, when you are writing some figures vertically, then the comma should be below the comma. Suppose you want to write down 5,000, 200, 2,000, 1,20,000. So this should be the way. 5,000. Then the figure of 200, 200. 2 should be below 0, and then 0. This is the way of writing figures. So be careful. Accounting cycle means accounting wheel. Recently, or at present, we are learning about accounting equation. You know, in every question, I have assumed that the business started on 1st April 2012, and I'm going to close it on 31st March 2030 in every question. It means this period cannot be more than 12 months. This rule is called accounting period concept. And on 1st April 2012 and 31st March 2013, in between, we keep on recording the transactions, and we stop the recording transaction 31st March 2013, and we make the balance sheets and we close the equation. In the same way, next year, again we'll start recording the transaction from 1st April 2013, and this wheel will keep on moving and will stop moving on 31st March 2014. So in this way, the accounting cycle will keep on moving. So at this moment, we are learning about accounting cycle on the basis of accounting equation.